This is Eric with with about 25 minutes to go before the close of the session, close of the week, and options expiration week. Let's take a look at markets here, and slightly down for the day, not too much, but a little bit to the downside. Let's begin with the S&P 500 weekly, and we can see that right now the market is close to that breakout level on the S&P 500, which is the all-time weekly closing high from July 2019, and the level we've been watching for this potential breakout, if it happens, is 3025.86. So the bulls would like the market to clear this level to the upside and give the market a chance of attacking brand new highs. Otherwise, bears are watching this for potential failure. If a failed breakout is what we end up having, then it might suggest a market in a mood of pulling back. So the level to watch, in my opinion, on the weekly big picture time frame is this level here. Anything above this level will be very bullish. Eventually, if we cannot move above this price over time, we might have to roll over. Now, I was thinking one way we can characterize the market is we've pretty much been stuck in this range going back to summer. So this has pretty much been where we've been trading, and the market still remains within that box. Another way of showing this is by taking a look at the RSI, and the RSI currently is giving us an interesting perspective. We have top side resistance and we have bottom side support on the weekly RSI. So it's my estimation that whatever happens out of this wedge on the RSI should determine the next major trend. Either we are going to get movement above the wedge to begin a nice move to the upside, or the market eventually breaks below this wedge and we see the market moving below this box where it's been trading for a couple of months. So I think the RSI does give us an interesting perspective. Right now we are within that end of this wedge, so we should conclude from this that more than likely seems to be something is imminent here. Either we are going to get a breakout above the wedge on the RSI weekly, or we are going to get a break below the wedge, and that should determine the next major trend direction. Now, as I discussed on Monday, I believe, or Tuesday, during the last market analysis video, is pretty much one of the main things here is the fact that the monthly charts are now positive. That changes the landscape. We can see that as far as price is concerned, we are still looking at that possibility of breaking out on the monthly time frame. And pretty much same comments from Tuesday's analysis. Problem here is even as prices are moving higher, we can see that the RSI and MACDs are not giving us the minimum requirements of the ultimate Moade breakout. So because we don't have the minimum requirements met, what that suggests to me here is that more than likely, even with a price breakout, eventually this market doesn't have that strong upside push, and more than likely this move, the upside move, is pretty much got a ceiling to it, would be my guess. So yes, we watch that price breakout, and let me give you that price level to watch here. It's a good guide as to how strong the market is to the upside. As long as the market is holding above 2980.38, we can say that the price is breaking out, but we don't have that power due to the failure or the lack of quality as far as the RSI and MACDs are concerned. So 2980.38 is a level to watch. And pretty much we can say the same thing as far as the NASDAQ is concerned, or the Dow. We can see as long as the market is positive, well, the Dow is slightly down for the month, not by much. But as long as we are close to these prior highs, we can say net the market remains stable to bullish. And I'll show you that on the weekly also. Same thing, take a look at the NASDAQ. Once it turned positive for the month, then that was pretty much changing the landscape. And as long as that's the case, we have to assume the market is looking to attack the recent all-time monthly closing high for the NASDAQ. They're slightly under 8,200. And again, same pretty much the quality of the breakout is lacking. We don't have the minimum requirements for the ultimate more the breakout. Again, it just seems like I'm repeating myself from Tuesday's analysis, but that's pretty much the big picture. Of course, we know that as long as the weekly continues to hold above the RSI 50 as it did here, as long as that's the case, generally speaking, whenever you have this support at RSI 50, it does suggest that there's a good possibility of coming back and testing prior highs. So as long as that is holding, that remains true. Another way of saying this is we can continue suspecting that the market is going to be stable to bullish as long as this line is holding. So as long as this line is holding, we just have to give the market the benefit of the doubt that prices are looking and poised to stay stable to bullish. Now, at some point down the road, should we go on to break below that RSI support line on the weekly, then that would be a change, and a material change at that, with a break below that line. That does suggest that now we can anticipate prices drifting lower. Now take a look at the dailies. As we discussed, or as I discussed this past Tuesday, there's a line here on the Dow daily, as I mentioned, and this line has now turned into a short-term stall point. You can see we've been rejected twice on this line this past week. I hope you can see that. So there's this double top rejection, and as long as we are below that blue line on the daily, that does suggest likelihood of the market being sideways around here or even down. Now, of course, what the bulls would like to do is come around eventually and clear that line to the upside to open the possibility of much higher prices. And of course, if you take intraday highs, there's a trend line here as far as price, and I'm sure a lot of traders are watching that recent resistance on the top on the price highs going back to July highs. So another challenge for the market. Ultimately, what the bulls want to do is ultimately clear that level to the upside. And again, as long as we are holding above the moving averages, which are pointing higher, this market still remains stable to bullish. Pullbacks, are pretty much part of an uptrend. So what I'm saying is, until we see a material break, then we can't really necessarily be very bearish. Now, what would be a material break would be trading below both the 200 and the 50-day moving average. For example, trading in this area would change the charts materially. But for now, pullback, yes. Is it destroying the charts? Not necessarily. And again, most of these charts are similar. As we know, markets do tend and have been mirroring each other for quite some time. And we can see here S&P 500 similar to that chart for the daily for the NASDAQ, also showing this look here. And we can draw a line from this break, something like that. So as long as S&P 500 on a daily is struggling every time it comes to these two lines, we can see where the market's going to be stalling. Obviously, nothing preventing the market to eventually come back and break out above those lines. So right now, not the strongest bearish look, you know what I mean? But it's not necessarily a broken market. It's a market that is pulling back. We can only tell how big of a drop we can get down the road. And by that, again, we'd have to go to the weekly chart. We would need to see a break of this line here to determine that we are in a serious pullback area. So again, as long as we are above this line, something I've been saying for weeks, the market remains stable to bullish. One of the areas in the market that is doing well and continues to do well is the home building sector, real estate sector. We can see the IYR still pushing higher here, trading at new highs. And we can see that on the monthly, this is consistent with our observation that the RSI had moved above 69.1 a couple of months ago. And even with pullbacks along the way, we see that right now we are trading at multi-year highs because the RSI continues to be trading with a strong level above 69.1. Now, as we come very close to the end of the session, market closing a little bit down, not even 1%. The Dow is down about 0.88%, S&P 500 down 0.3%, and NASDAQ down about 0.78. It's not the biggest drop, but a drop nonetheless, and pretty much not changing our analysis as of right now. And another area of the market similar to the IYR is the REITs. We can see that, take a look at the Dow Jones REIT index. Again, similar to the IYR, RSI did push above 69.1 as of July. And since then, this market continues to trade with a bias to the upside. So those are some of the leadership markets. And I have to say, even areas of the market like the biotech space, which was struggling the last couple of months, is stabilizing. So this look is not the worst look. If the RSI can hold this level, this is actually good. And the way we know this is a good area to find support as far as the biotech space is concerned is if you take a look at a long-term monthly chart, and if we keep it as simple as possible on the long-term monthly chart going back to the mid-90s, there's a simple line connecting the lows, as you can see. And right now, this is where we are seeing some type of support. As long as this is holding, it does suggest the possibility that over time, this might be where this starts pointing to the upside, as long as that support remains in play. We can also see that coming off 09 lows, whoops, change the width there. So coming off the 09 lows, this is where the biotech space started moving higher. We haven't been back to those levels since then. We can take that information and draw a bullish uniformity line, and you'll notice all the multi-year lows since 09 have come around this line here, the black line. And again, we are doing our best to hold as of this month. So as long as those two lines are holding, that would suggest that this is a stabilizing biotech space. Of course, if this doesn't hold and it goes on to break, that would be a major break. But for now, given the information, it's higher for the month, up about 1.5%. That's good enough to show that it is respecting the two lines. And as long as the two lines are holding, we can anticipate further movement to the upside, or generally speaking, some form of stability. Now, we can even go back and test this line here. Something like that. We can see how it gives us nice momentum entry levels in the market. Uniform activity support here for the lows of 98. Movement off the lows of 2003 right there. So the black line and the blue line are multi-year monthly support lines. As long as they are holding, this market, the biotech space, has a chance of stability, if not actually eventually moving to the upside. Is it going to move higher over a period of weeks only? No, it's going to take many months. Remember, it's a monthly chart. It's going to take months and years to rebuild after this serious pullback that we've seen over the last couple of years. A quick look at the Canadian market, and we can see here a line that is now also coming in play, just like we saw with the S&P 500, NASDAQ, and the Dow. This line here is either going to be a support line with a bounce or a break line with a break. So maybe they're the market, as far as the Canadian market is concerned, is relative to the S&P 500 a little bit off in terms of timing. S&P 500 already did find support on this line and bounced to the upside. So it remains to be seen whether the Canadian market is going to hold the same line or whether it might be leading markets lower with a break below that line. If we take a look at the Nifty, it had a great week, up about 3%. And this is not a surprise really because, well, I shouldn't say it's not a surprise, but based on the monthly chart, we can see that as long as the monthly is holding this line, remember there was a period where we were just about to break to 3-year highs. Looked like the RSI might be drifting to 3-year highs. That never happened. And what we ended up having was support above the 50 RSI level. So net, we can say that this is a stabilizing market. As long as this continues to be the case, this support are above RSI 50, it does suggest, just like we saw with the US markets, higher odds that we're going to have to come back and test recent monthly closing highs. So net stable. Did we move too fast to the upside this past week? Well, maybe you can say that with a 3% move. Maybe now we come back and we are going to be testing this recent break point right here. So that remains to be seen, but net, the monthly charts continue to be stable. So we can see here another market showing some form of stability at the very worst. And just like we saw with the S&P 500 NASDAQ, also there is a topside resistance line that is now in play. And also there's a line here, the uniformity resistance line. So both these lines are going to determine where we go in the short term. But we can clearly see here that after this break here, warning break turned into resistance at the highs and now turned into resistance as of late September. And now the market is trading in that range. What happens around here should determine the next major trend direction as far as the Nifty is concerned. Now this theme of stability can also be seen in other markets outside the US. For example, the emerging market ETF, EEM, is showing that there is signs of stability based on this long-term monthly chart. If you draw a simple line connecting recent monthly lows on the RSI, as long as this line is holding, and more importantly, if it can break out and move above 50, which is what it's doing, holding above 50, does suggest a market that is stabilizing. And we can see net it's holding in this range where it's been trading since middle of 2018. So net stabilizing, and as long as we are trading above the blue line, this remains a market that is decent and one can find quality breakouts as long as there's stability in the market. Now, of course, a break below that line does and will change the landscape if that happens. Right now, it looks like stability. Same thing can be said here with the Vanguard Total World Market ETF. Again, we can see prices are near highs, which is pretty much what the S&P, NASDAQ, and Dow look like, close to fresh monthly closing highs. And again, we see the same problem here is even with a price breakout, we don't have the minimum requirements of the RSI and MACDs being met, because the RSI is not above 69.1 and is not trading at 3-year highs. So none of this is happening. We can see that for sure the MACDs are not moving to 3-year highs. So again, this does not meet the minimum requirement. So yes, we are seeing a price breakout attempt, but the quality is very poor, which tends to give me, an insight into possibility of that breakout failing. Now here we can see again stability around RSI 50 on the monthly. As far as the EFA, the ETF that tracks European markets, are concerned, as long as we are holding above the 50 RSI level, that's a stable to bullish market. We can see also, if we take a look at the ACWI, which tracks the MSCI Asia tracking ETF, again close to highs on a monthly basis, but our RSI and MACDs are not trading at 3-year highs, and so we can see does not meet the minimum requirements for the ultimate model breakout, which means even with a price breakout, chances of failure are very high. Now we can see an example of this with this breakout attempt here. Notice that breakout attempt as of early 2015 happened with the RSI not trading above 69.1 and RSI was not trading at 3-year highs, which might explain why eventually we ended up drifting lower, even with that price breakout. And again, at that same time period, so we are talking about this time period here, early 2015, you can see that the MACDs were not at 3-year highs. So yes, you can get a price breakout, but if the quality is missing, that tends to suggest that you're going to roll over and the breakout is more than likely going to fail. We can see the ACWX ETF that tracks global markets, ex-US, so without the US. We can see stability as long as we are holding above RSI 50. We continue being on a potential breakout watch for gold as long as it is positive for the month. After one rest month, we can see that we can continue tracking this. The level to watch here for GLD is a price breakout above 143.75 would be bullish if and when it happens. That would be pushing the RSI above 69.1, very bullish. And we can see that already one of the MACDs, if not both MACDs, are trading at 3-year highs. So definitely this does meet the minimum requirements, and so the ultimate model breakout would be met. What we need is a price confirmation by movement above 143.75. And as far as the gold index is concerned, let me give you the breakout level to watch if it's going to break out, that is. And that is the recent monthly closing high. The level to watch here for a potential breakout and a price alert, or a level where we can set our price alerts, is 1529.40. Now, we also see something similar in a sense that now we are seeing the dollar pulling back as far as the UUP is concerned. This does look like RSI 69.1 rejection. And we see that now, if we take a look at a longer monthly chart picture, this level here was always going to be an issue if it was going to have uniform activity rejection on the monthly chart, which is exactly what we've seen. So at this rate, this is suggesting that the dollar should continue to struggle as long as we see that look. But if you're looking for momentum, fresh momentum in gold and the mining stocks, you need to see a fresh breakout as far as GLD and gold are concerned. Let me give you the price levels to watch for the metals, and GDX would need to break out above the recent monthly closing high. And here the level is 29.86. And silver would need to see a price breakout for fresh momentum, needs to clear the recent monthly closing high. The level to watch there for silver, it would need a push above 17.15. So if you don't have any position and you want to wait for momentum, I would wait to see it clear recent monthly closing highs. For example, we can see a good example of why we wait for momentum breakout here. Once we clear that previous monthly closing high, we get a spike, relatively speaking, to the previous trend. We have a nice uptick in price after this monthly price breakout. Looks like every week for many months I've been coming back to this weekly chart for USO with the same analysis. This has been a messy price action period. We've been trading in this range, call it between 11 on a weekly closing basis, between 11 and about 12.50. So why we've been trading. Tough to read. I would say I don't know which way it's gonna go. No idea. Even if you take a look at the RSI, we continue trading within this wedge, top side resistance and bottom side support. Tough to read. I would say I don't know which way. I can only say that maybe the pattern of sideways market continues, since it's been where we've been trading since May. And maybe what it's gonna take is eventually we might need to clear this top side resistance on the weekly for prices to be influenced higher, or it might take a break below the wedge to take prices below the recent range. Right now, tough one to read as far as I can see. If we take a look at Bitcoin, so we can capture what the cryptos are doing as a group. What we see here is, yes, it's down for the day, down about 1.7%, but generally we've been trading in this range here. So if you take the recent high and the recent low, we're pretty much trading in this range. And also, recently we came back to test this breakpoint and it turned into resistance. Break turns into uniform activity rejection and another rejection there. There's another way of looking at this, which is the RSI top side. And maybe we can conclude here by saying, on a short-term basis, one can use this line here, which is the recent highs on the RSI on the daily. And the conclusion here is, as long as we are trading below the black line, then Bitcoin is sideways to down. It would need Bitcoin moving above this declining resistance line on the RSI for prices to have a chance of moving higher. Now don't forget, on the weekly, we are still within the possibility of finding weekly support here or break. Remember, this was an instrumental movement above the black line, which is this entry. And about 2 weeks ago, we bounced on this line, maybe 3 weeks ago. As long as that line is holding, ultimately there's a possibility of bouncing and recovering. But we also know that a break below this line would actually lead to more selling. Now, the other thing I should have mentioned is on the daily, we continue watching this area here, this area around and below RSI 30.9. Anything below this 30.9 RSI level, if Bitcoin drops below 30.9 on the daily, expect a big down day. As long as that's the case, similar to this reaction here, where we fell below 30.9. So as we get closer to 30.9, that's always the risk. But I would say net, we are stuck in this price range here, and the top side RSI line is pretty much a good guide. We would need to clear that line, and the line can be drawn from many vantage points. You can either look at it from this point of view. We need to clear this line to the upside on the daily before Bitcoin has a chance of recovering to the upside, or we can also draw another line, which is from the recent highs here on the RSI, something similar to that. Conclusion is the same. It's going to take price action to the upside and RSI movement above this line before Bitcoin can move higher. Let me stop right there. Do enjoy your weekend. This is Eric Mother with Mother.com. By the time you're watching this video, website should be back online. And I do apologize for the inconvenience this past week. Peace and blessings. ACWS.